Hey everybody, it's Ethan here Pursuit, and today we're talking about the stock market. So I don't know if you've been watching it, but in the last 15 to 20 days, our stock, our, our economy has practically tanked. The values we're seeing today are what we were seeing 5 years ago, before Trump was even in office, back when Obama was our president. Think about how long ago that was. Obama was our president. That's the values we're seeing today. The S&P 500, the Dow Jones, all these companies are going back 5 years. Now, a lot of this has to do with the fear and the panic. But I think the main problem is people, whatever's happening today, they have no forethought. They have no forward thinking. They just think whatever's happening today is going to happen tomorrow, is what's going to happen for the rest of their lives. I'm not quite sure how they get on that, but that is ultimately the thinking that causes this. You look at Tesla. It was up almost 4 times its value in roughly 15 days. And people were still buying. People were still buying multiple shares for the first time ever. They had no idea what this company was. They had no idea why the price was at that much. And they were buying at 4 times the valuation of it as it was 20 days ago for absolutely no reason. And that is because they think whatever happened yesterday is going to happen tomorrow. They see a company 4x overnight. They're like, I got to buy that so I can get the 4x on my money. And they think it's going to 4x again. That is not the case. And I mean, people at 2x thought the same thing, and that was the case. So I guess sometimes they get lucky. Now, we see the same thing happening today. In 20 days, we lost 5 years of our company's economic growth, a company's economic value in 20 days. I'm giving a rough estimate on days here, but bear with me. So we see stocks cut in half, 20%, 30%, 60% lost overnight, 20 days, and people are selling at these ridiculously low prices. Why are they selling? Because they think, oh, we lost 50% overnight. What if we lose another 50% tomorrow? I can't handle that. I can't do that. I have to sell. And they're losing all the profits they've earned over the past 5 years. Bam, they just sold off. They lost all of it. And because they think this is just going to continue on. This is the new trend. We're going to zero. And they just see that. But they don't think, oh, what's going to happen in 6 months? What's going to happen in a year? Now, the main thing that drives our economy is actually productivity. So I buy a house, I build a house. That $100,000 I spent on building that house is now in the hands of the contractor, of the lumber supplier, of all these people. That $100,000, but that house is also worth $100,000. So that $100,000 I had to start with in cash is now really $200,000 because I still have the market value, maybe even some more than that, of the house, plus the cash is still in the economy. So productivity drives our country forward, and I don't think our country lost 5 years worth of productivity overnight. These are some of the 5 most productive years we had. There's been some amazing economic drivers in our country. Companies have grown to ridiculous levels. We have all this stuff, the stimulus, all these amazing things happening in our country. And there's no way that just a few people getting sick and a few weeks of companies being closed, that we lost 5 years of economic growth. Maybe we have 1 year of bad economic growth, and we go back, we lose maybe 2 years. But I think the stock market has already way overcorrected, and we're gonna see it bounce. So typically, when you see a recession, people start getting a little afraid, and things start going bad, and you see like this S curve down. Like it starts slow and it speeds up, and then it slows off at the bottom. And then when we hit the bottom, which is usually you lose like maybe 2 years of economic growth over the span of 6 months. Then 6 months later, it starts climbing back up. And in a year, you're about back to where you were. And you get 10 years of economic growth for that. Rough estimate. Those are the numbers. But so I think when we saw this over panic, this huge over panic, and we just saw the stock drop. And I don't think it's done dropping, but that's not based off of what should happen. That's based off of what the panic and the fear I see in everybody around me. And I think it might drop a little farther, but I think in the quarter one ends the end of this month, and we should, in the next 30 days after that, we should start getting reports from companies, and I think you're going to get some really cool reports. And people are like, oh, wait. That's all the worst things are. It's like, that's not that bad. And it's going to come back up. It's going to bounce. Just like overnight. It'll be about 20 days, about the same amount of time. We won't go back to the same levels we were, but we're going to go back. And it's not going to be that bad. The virus is really bad, and it is doubling every day. But we're taking some major steps to stop that. And I think, like, all we got to do is get everybody to stay indoors for 2 weeks. You know, if nobody went outside for 2 weeks in the entire country, not even outside at all, the virus would die. Because it takes 2 weeks for everybody who has it to get over it. If we did 3 weeks, and once everybody who has it is over it, they can't pass it, and it can't survive. It just dies. So also, Trump has pushed through some major things to get people tested faster, and to get the vaccine pushed through testing way faster than normal. So we're not that far off. It might be 12 months for us to fully recover from the effects of this. A normal recession takes 12 to 18 months. And this, we're about due for a normal recession. The 2008 market crash was a once in 100 years kind of crash. We're not going to see valuations like that for long. That one took 3-5 years to recover from. We're not going into a recession like that. We're looking at 12 to 18 months with everything the governments are doing. I mean, if we let this fester and we let this grow and we let it get a lot worse, we could see a lot worse valuations. But with reaction time we're having, with what's happening now, in 3 months things are going to be better, and in 6 months people are going to forget this even happened, and in 18 months we're going to be right back up to where we were, and it's not going to be that big a deal. But yeah, just the fear in the economy is so great. Everybody's selling off. Everybody's reacting out of fear. But once more people have had it and they realize, oh, it's not actually that bad. I can just stay home for 2 weeks and bam, I'm better. It's like, and then they're not going to be afraid of it. People are going to be less afraid of getting it. And they're going to realize that everybody's already had it and there's not a lot of fear, and we can open everything back up. And once that happens, once the fear disappears, bam, the market's going to literally jump. It's going to bounce. So I would just let everybody know, just start setting aside a little more and don't overextend yourself. This is not a market advice. I have to legally say that, I guess. I hear everybody else saying it. But what I'm doing, let's do that. What I'm doing is I'm going to set aside as much as I can and just put it into some of the companies I know are going to come out of this recession even better. And there are a lot of really good options out there. I think the hardest thing to decide, the thing I have the most trouble with in this recession, in this time of crisis, is deciding which stock to buy, because there are so many out there that are so good price that I just do not have enough money to invest in all of them. So I'm going to leave with that. Thank you for watching, and you all have a great day.